All right, this is Dr. Jeffrey Scott, and I am sitting here at the beautiful view from the Atlantis Royale in Dubai, waiting down for my business partner's wedding. Well, it's my daughter's wedding. Beautiful city. Amazing what you can do when you're in the desert, find oil. We've done quite a bit. Sell-off continues. I thought I'd do a quick video look at are we seeing anything that would suggest the bottom is near. November 18th, 2025, 7 in the morning, which is 3:30, 3:45 here. Again, my email is marketmripro@gmail.com. If you're anybody that joined the family with the add-on for Metastock, very much so excited that I've launched it in a platform with massive international distribution and opportunities to meet people across the world. This is for educational purposes only. Anything I recommend should be considered education and not investment advice. Intensive videos to show you how I look at the markets from a top-down perspective using the various tools that I own or I have created. It involves risk. You're solely responsible for any investment decisions you make. I may own or intend to sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult your financial advisors. And I've got tools in multiple platforms, but am an my Google group is called Top Down Trader. Just go to all groups, search for Top Down Trader. Let me know how you want to be contacted. Love to have you there. I'll keep a mailing list. I have. Old slide. I just bring it back to remind us that we talked about it. Clusters are bad. Clusters are bad. We got a cluster here. And the sell-offs have occurred after clusters. So I don't want a bear market. I'm not a perma bear. I'm a bull. Um, but I've raised cash, as I've been talking about for the last several weeks. Um, Pretty close to full cash plus put protected. If you don't know options, a put is the right to sell my stock at the strike price. And if the strike price I have is kind of where the stock price is, stock goes down, goes up, and I can end up selling it at the current price. Stock goes up, I make money. That's the downside of the married put. But you can put this on before you have speaking of major market calamities, we're trying to hold. This was Friday's pulled down to the 50 and bounced on the Praveen index. Bounced up a little bit. That 50 and white's the last stand. If we break below that, this that would tell me the market is over. Corollary, we pull off, we pull back. Know your news and earnings. So this is Tuesday. You'll probably get some import prices, industrial production, capacity, home builder confidence, and then we have Michael Barr speaking at 10:30 on Wednesday. Philadelphia Fed minutes, that'll be interesting. We got FOMC minutes should be less interesting since all the Fed has been speaking. But really, the big thing this week is going to be Nvidia earnings after close tomorrow. Question is whether it will make a difference. Can it stop the sell-off? Does it accelerate the sell-off, and then the market rallies on bad news? So much is weighing on that decision. It's probably not as big of a weight as Nvidia Wednesday afternoon should be interesting. It is a judgment call to stocks over earnings dates. It's bad judgment over stocks earnings date schedule. For more information about anything I talk about, feel free to email me at marketdirector@gmail.com for coding issues, for viruses, trouble installing coding at marketdirector.com. Websites out called Market MRI Pro. Um, Look forward to holding my next Florida meeting, potentially in partnership with one of my good friends here, John Person, and we'll have more to talk about. On to the charts. Let's go to that. Save. All right. MRIPro.com. Again, welcome to the Nasdaq users. I will be using a tool called Market MRI, which is a full trading app, full market analysis app that I brought to market sometime this year. It has some unique capabilities. What it really does is it matches my approach to trading. We could see on Monday, VXX was up 5.15, dollars up 5. Then the indexes were all down. Q's 9.85, 5.93, down 6, and the Russell down 2. And Bitcoin continues to be obliterated, down 2.5% more and down 13% over the last 5 days. NYSE, NASDAQ, new highs minus new lows. You could see massive increase in the number of new lows, and the negative interesting in the negative category for a bounce. You could see only 12% of the S&P 1500 were up on Monday, 24% of the NASDAQ, and 14% of the NYSE. Clearly a very U.S. markets. If we look at the spider sectors to see what was or was not working, but utilities were up 0.9, not a big surprise. Defensive play paid dividends, but a mixed bag. Some of them are in the data center supply, and those got hammered. You can see financials led to the downside, 1.91, energy 1.83, tech 5.6. So a pretty rough day in this markets. And if you look at themes, biotech continues to go right, global energy, and Southeast Asia. The rest are all negative. What was the worst? Besides cannabis, home construction, clean tech, fintech, blockchain, cloud computing, Internet of robotics, big growth leaders. Fundamental that have changed. Now the weekly charts shouldn't be looked at or taken as final until the end of the Friday, but um, it flipped bongos now on the spider, the twos, and the Russells in the second week of flip bongos. The Russell has moved below the WMA. I've now got a sell signal on the Russell. So markets are clearly um, more than just pulling back. Trend is out that way, but now there's a lot more pressure, and that should give us reason to think about lightening any existing, even starting to look at contra ETFs, which tells me I'm a little bit more bearish than I was 2 days ago. If we look at the diamonds, excuse me, the dailies rather, you could see we remain, let's see, all the way here, well below WMA spiders, the Qs, diamonds below, as has the Russell. And when we look at buy sell signals, we've got sell signals everywhere. So I'm getting more concerned about the market. If you listen to me for any length of time, I've been concerned. Hindenburg's got me to get out of the market for the most part. If you look at index ETFs very quickly, spider is sitting on the 50, broke a little bit while sitting on the 50. Seasonality still okay. Will the 50 hold? Gosh, if this is down to the 200, 613, that would be a 10% move from here. That would be a pretty good. But you got to wonder, are we going to revisit that? I don't think so. I'd love to see it hold somewhere close to where we're at. A lot of people follow the 21-day EMA on IBD Live, and you can see we broke through that as well. It actually tracked 17-day simple and the 30-day WMA. I wish I could say some bullish things here, but this was a killer bar, which would have been say last week. Friday tried to recover on the 5th Monday. Not very bullish, no matter what you say or think. Hughes, similar story, broke below, closed below, line in the sand. Stay here, you could see CPR to the downside, volume breakout, momentum downside, and the OBV breaking down. Not pretty. Look at the diamonds, and the diamonds are sitting right on. Let's see the close on the diamonds. Our close at 466.32 and 466.50. So we closed just under the 50. So on all the major indices, we've closed under the 50. First time in a while. Something to be about volume breaking down. And lastly, the Russell, which has been the weakest after latest last highs, which would have been October, breaking down further here. The idea of going down and testing the 200, which is at 219.96, and we closed at 232, 6% more. It doesn't seem too far out of kilter. So markets look bad. Volatility, which we kept saying, something seems amiss because it didn't go back down to its resting value. It really looks like a breakout, but you got this kind of a rounded bottom, and we are still in pain. I think we're not. And if we look at the U.S. dollar, we know that now that looks like we're in an uptrend and scary, but then you go back here and you look at, well, we got a sell off. We're consolidating off for a big sell off. Now I'm not too concerned about this. So commodities have been holding up. See, both gold and silver down 1%, 3% on silver. And are they going to hold the 17? Are they coming down to 15? Certainly would not be a surprise, I think, to see them come down and retest that. The oil cannot, natural gas has pulled back some, and we can see the 10 years on Monday were down 0.3%. The 30 years as well, down just a tad. If we go and look at buckets, look at the number of stocks piling up below the Bollinger Bands. 20% on the NASDAQ, 20% of the S&P 1500, 22% of the Russell 2000. Clearly that is abnormal, but it can get much worse. So could it bounce on Tuesday? Absolutely. Will I expect it to bounce? I don't think we're there yet. Market breadth, you can see the NYSE composite on the left had a big and on the right that as well. So both the composites and the Qs, the NYSE, are all closed below the 50, back from the highs, a drop. But when you look back at the 57th, which is where we had the last bottom, we're not in close to the oversold amount that we were. Yes, the new high, new lows are negative, and the up-down volumes are negative. We're not really seeing a signal that says we bottom. We have those signals. Sometimes they bottom before you see the signals. And then one of my favorite things to look at here, we got the spider, NASDAQ, and I see that we're just above 10%, 0.17 on the spider, 0.13 on NASDAQ composite, 0.16 on the Russell, and zero point 0.1 on the S&P 1500. And the question is, are we ready to bounce because this is so oversold? And again, you got to pull back to the latest low. And you could see on April 7th, we got down to 0.01, 0.03, so we're close. And maybe one or two more candles gets us there. So I think we're getting close to a bounce. Just don't think we're there yet. We will do some more damage before that point. Doesn't have to happen to see the bounce being imminent. If we look at the ratio charts, real estate's flipped up a little bit. Utilities have flipped up a lot. Discretionary week. Staples, you expect to pick up some. Energy has been okay. Communications bad. Industrials bad. Materials good. Bitcoin very, very bad. So I wanted to say today to let you know that hey, things don't look great. Looks like they might go lower. We should bounce soon, but it doesn't have to be today. And if we just go to the JAS layout, let's just look at those contract ETFs to start with. Is it too late to buy the Contras? I don't think it's too late to buy the Contras. Tight stop. The dog just goes up when the diamonds go down. Break it. It started. I don't think it'd be wrong. these stocks. Doesn't seem to have done much. That's shorting semiconductors. Here's shorting the S&P 500. And for split, it's there. How about shorting the Q? 52, not much yet, struggling at the 50. And then the TZA is probably what's going to look the best. So, look, they don't look great. Obviously, they've been down for years and working on ETFs over the long time because of their high expenses. They do poorly. This is one way to protect your portfolio. I prefer the options route. Let's just very quickly see if anything comes up that looks attractive. Which, if it does, I probably wouldn't be so weak. A pluses, got a couple. CDZI, the utility, break out there. Cheap utility is a 1.43% dividend, expecting 54 cents a year. Your earnings that will go against a 14-cent loss. Revenue is pretty low, not a big $1 million market cap. I don't know anything about it. Earnings are out, beat revenue estimates. Mojave Brown, don't know anything about it, but in a horrible day in the market, there's something that gapped up. Metal. J Bio, obviously, it's a biotech company. Don't know anything about it. So this is how you find out. You read the stories. Air American Society of Nephrology, best in class, selected anti-APRIL monoclonal IgA nephropathy. Well, that's an interesting. So they got a drug that looks good. Pricing in something because it had a big move. Yeah, I mean, an IPO, I'd want to know more about it. But here's a stock that's come off of a really bad period and looks like we're on some data. OMER is another biotech. See that name here? Big back gap to run by. So breaking out again from a licensing deal with Novo Nordisk, um, survival benefit. So many things, something about their drugs. And I do more research, but that looks interesting. And SYRE I liked for a while. This is a low-cost biotech that broke out. But none of these are set up, so I would be very careful doing anything long anyways. But no surprise, it's biotech and utilities. Very quickly, AIDS, boom, biotech doesn't make money yet, but it's got revenue coming in. Now, as a utility, I actually own some of this stock, and it looks like it's getting ready. Jazz Biotech. Ooh, that had 11.05, $8 of earnings. That's not what drove it. It was 11.05 to the left. $6 in earnings for 224. Revenue started. What's the news say? Cancer drug. All right, well, that's interesting. NVFY. This one is cyclical. PACS, Financial Services. Nothing. That earnings move. Lyra we just looked at. XCL, I think, is another utility. No surprise since utilities were leading. Look, I'm not seeing anything that says go out and buy me. I'd be careful here. Rallies in bear markets. And I'm not saying we're in a bear market yet. Rallies are massive. I think the video earnings matters. The Fed comments matter. Boy, what about all that data? Hold on to your seats, put on your seat and shoulder belts, maybe even put a crash helmet. Let's see what this market does. I'll try again another one the next day. Take care and watch the fucking